Hey, this is Dan Moralez, and this is Homebuyer Radio, episode number 17. This week, I want to talk about interest rates and just what can happen with interest rates. Usually the quickest and easiest explanation is interest rates go up and they go down. They go up and they go down, they go up and they go down. Now, what most people don't realize as part of the mortgage process is interest rates can go up and down on the same day. You can have an interest rate that starts at a certain point at the beginning of the day, and by the end of the day, rates could have moved up before the day was done, or they could have moved down, just depending on market conditions. So what most people don't realize is mortgage money comes from the bond market, and the bond market, like the stock market, can have wild price fluctuations throughout the day. Now, in some cases, those price fluctuations can move for you, and in some cases, they can move against you, which would result in a higher price being offered for a mortgage. So just because you got an interest rate quote from a lender, let's say last week Friday, and now you're checking an interest rate quote from another lender on Monday or Tuesday, you have to keep in mind that you are comparing apples to oranges because like most lenders, we all price to the market. And if the market has moved up or down since you got your original quote from a lender, you really are probably comparing apples to oranges, and you could be taking a deal that on the surface you think is better when really it's not, or maybe it's worse than what you really thought it was. So just a little bit of apples to oranges comparisons there. If you're somebody who is actively looking or shopping mortgage rates and terms, you really want to make sure you're getting prices and terms all on the same day from all the different people you're considering. But the other thing that you really need to take a look at, and this is really probably maybe the second part of this episode, is you really need to look at what are the cost to get the interest rate that you're being quoted. Because one of the things I've seen as I look at different rates that lenders put out on different websites is the devil's in the detail when it comes to the fine print, because a lot of times to be able to offer a lower interest rate, a lender will increase their closing cost. So I always tell people closing cost and rates go hand in hand. So the higher your closing cost, the lower the interest rate you're going to get, and the higher the interest rate, the lower the closing cost you're going to get. Now, a lot of times our minds are conditioned to say, gosh, give me the lowest interest rate because the lowest interest rate surely has to be the best deal. Well, that may not always be the case because you have to look at what the closing costs are in addition to your interest rate to figure out what really was the best deal. Because in some cases, if you paid abnormal or super high closing costs to get a lower interest rate, and especially if you kept the house for a shorter period of time, you may have actually shot yourself in the foot and taken the mortgage option that was actually the most expensive option for you. Now, a good qualified mortgage lender like myself is going to actually go through the details, show you the options, and show you what options are available to you and why one option may make more sense to another. And that's part of the process of what we do is we try to understand your long-term goals and objectives, and we try to make sure that we tailor your mortgage product and option to you to make sure that you get the most favorable outcome for you long-term. Now, cost and interest rate do play a factor. If you're looking at a loan with a down payment of less than 20%, then you've got to look at what is the cost that you're paying for mortgage insurance, because a lot of times people assume that the PMI cost is the same no matter where you go to get a mortgage, and that is not true. There are multiple PMI companies that are out there, and what most people don't realize is many of those different PMI companies have different rates and different terms and different prices that are available, and that's especially true if a lender has negotiated to get a sweetheart of a deal for their clients. Now, I know in our case, we have some of the most aggressive PMI companies in the marketplace, and oftentimes we can come up with a PMI premium that is very aggressive when compared to what other options you may see from a different lender. So you want to look at the total package: interest rate, closing cost. If you're doing a loan with less than 20% down, you want to look at mortgage insurance and what the cost of that is. What's the term of the loan? But those are all things that are important to consider when you're looking at mortgage options that are available to you. And of course, just keep in mind interest rates and terms can change. So even if you've got pre-qualified or pre-approved at an interest rate at a certain point, just keep in mind that rates can go up between now and the time that you do actually write a contract on a house. once you have an accepted contract in a house, normally in most cases, a lender will give you the ability to lock in an interest rate. And when you lock in an interest rate, that just means that that's the interest rate that you're guaranteed, provided that you remain eligible for the mortgage that you've applied for and you're able to close within the period of time in which you've locked in for. So we'll talk a little bit more about interest rate locking in and good stuff like that maybe in a future episode. As I'm talking about this, I'm thinking that's a great idea for a future episode. So we'll do that in another episode to come here. So again, my name is Dan Moralez from Northpointe Bank. My NMLS number is 709729, and Northpointe Bank is an equal housing lender.